Hi everyone. Thank you so much for joining our webinar on transition plan requirements under the Australian mandatory climate reporting regime. This is the third part of our webinar series on the mandatory reporting requirements for this year. So those of you who have heard me talk before, welcome back. Those of you who are new, welcome. Before we get started, SLR would like to acknowledge the traditional owners of the lands on which we meet today. For me, that is the Gadigal people of the Eora Nation, and we pay our respects to elders past and present. Couple of housekeeping items. So all attendees are going to be in listen-only mode, so cameras and microphones disabled for the session, but we do have the Q&A function enabled. So if you have any questions as we go, please drop them into that Q&A piece. We will hopefully have a bit of time for questions at the end, but if we don't have time to get through all of them, we can follow up afterwards with any further responses. We will also be recording the session and we'll circulate that and make both the recording and the slides available to everyone who's signed up. As mentioned, this is the third part of our ASRS webinar series for the year. The next one that we have coming up, probably at the start of September, will be around TNFD, so nature reporting requirements and an introduction to the LEAP process. And there will be further webinars around ASRS and climate disclosures later in the year. So please keep an eye out for those when we publish them. In terms of what we're going to go through today, there's a few things on the agenda. I've given a bit of an introduction, and for those of you who don't know SLR, you can go and watch some previous webinars where I do the full spiel, but we'll get straight into the content for this one. We're going to run through what the AASB S2 requirements are around transition plans and what that actually means. I'll then give a high-level overview of what a transition plan is and what a transition plan should be. And then the main focus of the session will be running through some best practice examples. So we have a number of transition plan reports that will highlight to show how people are disclosing this and where people can begin for their own disclosures. As I said, we should have 5 minutes or so at the end for Q&A. So if you have any questions as we go, please do drop them in the chat. So to get started, what are the actual requirements for mandatory reporting of transition plans? Those of you who've joined our previous webinars will recognise this slide, and effectively what we're trying to do is distill down all of the requirements into three kind of main aspects. The first is the impact that your company is having on climate change, so what your greenhouse gas emissions are, both your operational and broader value chain emissions. And then the second is the impact that climate change is having on your organisation or could have on your organisation in future. So all of the work that companies have been working through on risk and opportunity identification, climate scenario analysis, and your resilience to those emerging risks. The transition planning piece is effectively the so what of all of that. So those first two pillars are very much descriptive disclosures of a true state and current state for your organisation. The transition plan is what you're doing about that. So on the impact on climate side, your decarbonisation targets, your roadmap and your plans to reduce those emissions. And then on the climate risk side, the mitigation and adaptation plans, as well as those plans that you have to realise opportunities going forwards. In terms of the specific requirements, so one thing that I think it is important to point out is that the standard does not actually require the disclosure of a formal transition plan, which feels like it should be the end of the webinar. We can just call it there. But I think what is really important to note is that within the requirements, a lot of the things that you do have to disclose form a core part of what a transition plan disclosure should be. So within that resilience section, the strategy and business model change related to those risks and opportunities, and the overall response and mitigation and adaptation plans to those risks and opportunities as well as those climate related targets, what you have set and your plans to progress towards those. All of those things are what typically sits within a transition plan, which you will have to disclose anyway. And when you look at the requirements that sit underneath, both within the disclosures and within transition plan frameworks that we'll talk through in a second, they're effectively the same thing. So it's what are you doing about those risks, and what are your targets and your progress towards them. The other thing that I think is really important is where you have identified risks and opportunities that are related to that climate transition, whether that is both towards a more resilient future or towards a low carbon future, you will be expected to disclose how you're managing those risks. And the best way to do that is through a transition plan. So while you may not need to formally develop and disclose this transition plan, what transition plan frameworks do is give you a really good way to think about those disclosures in a way that is consistent with your peers and consistent with the ways that your stakeholders are going to expect to see you disclosing these things. So I've said the words transition plan a lot. I do want to cover off very briefly what a transition plan actually is. And there's a couple of pieces within here that I think are really important as companies progress towards these disclosures. What we have seen from a lot of companies in their first year of mandatory reporting, or companies who are approaching transition plan for the first time, is they focus on decarbonisation. It's the area that people have probably progressed the most. You may have set some targets, you may be working towards net zero, you may have some plans in place around kind of funding some of those decarbonisation measures and some engagement on the way already. And it's a really important part of that transition plan to understand how you're going to decarbonise your own organisation. But that is only one part of the puzzle. The second piece is around that response to those climate-related risks and opportunities. And again, as companies have been working towards their first year of disclosures, you will have started to engage with this. So as you're thinking about your resilience assessment, how you're managing these risks, portions of that feed into what you would disclose within this transition plan. But often this goes even further than those initial disclosures would. And you're starting to think about what that future business model is actually going to look like as you try and manage those risks and kind of realize those opportunities in that transitioning economy. And then the third piece of the puzzle is contribution to an economy-wide transition. And there's a few different ways that this can interact with a business. I think probably the biggest piece that we see is around your products and services. So how are you enabling that low carbon future through the things that you are doing and selling as an organization? But you can also include within here broader value chain engagement or partnerships, especially things like industry partnerships where you're tackling some of those bigger, more fundamental problems. How can you tackle that as an industry, not just as a siloed individual company? And in terms of where these kind of pillars sit within your disclosures, I've said this a few times and I'll keep repeating this throughout. These are things that you're going to be working on disclosing anyway. And the transition plan is effectively a framework around which you can structure those disclosures in a way that is easily accessible. So under that decarbonisation piece, you need to disclose whether you have greenhouse gas targets and any plans you have in place to achieve those. Within that response to climate related risks and opportunities, you need to look at current and anticipated change to your business model. And then those mitigation and adaptation efforts that you're putting in place for those climate-related risks and opportunities you have identified. And then within that contribution to the economy-wide transition, there's a couple of ways that this kind of comes into play. And part of that is through those kind of broader resourcing plans. But a really important part of this is the assumptions and the dependencies piece. So thinking about what is outside of your direct control and what needs to be true, both in terms of kind of policy environments or legislative change, or in terms of new and evolving technology to enable the plan and the goals to be realized. So that's a little bit about what a transition plan is. For the next section, what we're going to do is focus in on the transition plan task force framework, which is a best practice framework for transition planning, and then also look through a few examples as to what good looks like and how you can think about these disclosures. So the TPT framework is generally referenced as that kind of gold standard framework for climate transition planning. It was originally developed in the UK for disclosures there, but it has since been adopted by IFRS as a kind of an international best practice. And some of you may have seen just this week, the Australian Accounting Standards Board published a new guidance around transition planning. And that guidance directly references and adapts the TPT guidance for disclosures within Australia. So it provides a really good basis, and it is being directly referenced by the standard setters as a way that people can think about these disclosures. In terms of how this is set up, there are three main pillars. So the first is around ambition. So this is all of the foundational pieces that sit within your disclosure. Why are you doing this? What are the core goals that you're hoping to achieve through this plan? The second piece is all about the actions that you are taking. Generally, this is the biggest part, especially that implementation strategy piece. So this is everything that you are doing to enable that transition plan to become a reality. And that is both on the decarbonisation side, so the activities that you have in place or the funding that you're going to be putting in to make those decarbonisation initiatives a reality, but also on the risk and resilience side as well. Within that action pillar, you also have the engagement strategy. So I talked a little bit about those kind of external dependencies and factors that you need to manage outside of your direct control. So this is where you can talk about the actions that you are taking to enable those things to become true. And that can be both within your organization, within your broader value chain, and also kind of more broadly externally, lobbying with governments and things like that as well. And then the final pillar is around accountability. So this is where your metrics and targets sit, and this includes your targets around decarbonisation, but also broader business metrics and financial metrics that you're tracking in terms of how this plan is being implemented. And then finally, the governance piece. So who's in control, who has ultimate responsibility for this, and also where different parts of this plan are going to sit within your organisation, because this can't just sit kind of within one team. Underlying each of these disclosure elements, there are a lot of sub-disclosure elements. And I think one thing that is really important to note is that because this is not a mandatory framework, it is guidance that you're recommended to look at. You don't need to worry too much about hitting every single one of these sub-disclosure elements, but it provides a really good basis for understanding what you should be disclosing and what you should be thinking about. So when you start approaching this, you shouldn't take this too much like a kind of checklist that you have to hit every single point on, more as a framework that can guide where you're going to put disclosures and other things you may not have considered. So I'm going to run through each of these disclosure elements now, starting with the foundations through to the governance pillar at the end. I'll describe a little bit about what they are, but I think the kind of main focus here is going to be looking at a few examples of good practice. So the foundations pillar, as I said, is all about that strategic ambition piece. It's the why for the transition plan. It's a piece that quite often gets missed when people really just focus in on the decarbonisation piece. And often this goes a lot broader than that, where you're thinking about that organisational change and how you're going to adapt your business going forwards. The first example I've got for this is from Fortescue's transition plan that was published last year. And there's a few things that Fortescue do really well within their disclosure. I think the first is the clarity on those objectives and the priorities. So you can see they have these three kind of main priorities: reduce their emissions, respond to those risks and opportunities, and then develop solutions to drive that economy-wide decarbonisation. You'll notice that is very similar to the three pillars that I talked about earlier. But what they also do really well is dive into that business model and talk in more detail. I've just got one screenshot here, but if you go into the report, they go into quite a lot of detail around how different parts of their business model impact different parts of those objectives and those priorities in different ways. So it's a really good way of kind of breaking down what you're doing where within your organization. The other thing that Fortescue do especially well is talk about the assumptions and external factors and those dependencies outside of their direct control. If you go into their report, you can click on each of these kind of 10 10 things, and it gives you a long drop down of all of the things that sit underneath that. But they talk about the policy environment that would be needed in order to enable the transition that they want. They talk about the technology that needs to be developed either by them or kind of more broadly by the industry. They talk about broader macroeconomic and geopolitical conditions, and also around things like greenhouse gas emissions pricing, being very clear that this needs to be implemented at an economy-wide scale so that they're not at a disadvantage for progressing some of these things in the market. So being really clear on what those assumptions dependencies are and what needs to be true to enable the plan. And this does two things. One, it keeps you safe. It means you're not being held to account for things that you can't control. But it also sets up the lobbying or the engagement that you're going to want to do in order to make these things happen and drive that change that you've set as your ambition. I do have another example for this foundations piece, and the reason why I brought this one in is that Fortescue plan can be quite overwhelming if you're approaching this for the first time. They're effectively doing everything. This is from Zespri's plan, so the kiwi fruit growers over in New Zealand. And the reason why I really like this part of their disclosure is they've really focused in on two things that are important at the expense of everything else. So they're looking at future-proofing their supply chain, and they're looking at resilient orchards. And those two things are the pillars that run through the entire plan. There are bits in there around decarbonisation and other bits and pieces, but they really focus in on these two things as the foundations for what they're going to be doing. And I think as companies approach transition plans for the first time, taking that lens of prioritisation, what is the most important thing that we need to do in that transition to a low carbon economy, and how is that going to impact our business, really helps distill down the focus and means you're not spending too much time worrying about all of those things that are ultimately peripheral. The next section is the implementation strategy. And as I said, this tends to be the biggest piece and the piece where people have been working, especially on those decarbonisation strategies, have probably been disclosing the most. There are a few things that sit within here. So part of this is how are you implementing this within your business operations. There's also the requirements to disclose around what your products and services are going to look like and how you're transitioning those. The big piece that I think is probably new for a lot of companies approaching this is the financial planning piece. So how are you actually going to fund these initiatives, whether that is kind of within your standard planning cycles, whether you need something else like an internal carbon price, where that capital is coming from to enable these changes. The example I've got is from Vodafone's report. So this was published last year as well. There's a couple of things I like about this. You probably need to squint to read that screenshot. But I think one thing they do really well is map out responsibilities within the organization. So they map out what their risks are, where they sit within the plan, what they're doing about them, but then ultimately who has responsibility for that at the end. And then within that, what those different teams within the organization are actually doing. This is for their climate-related risks. They also have a very similar diagram for decarbonisation, which is a little bit more complicated. But again, I think what they do really clearly within here is show which teams are responsible for what. And you can see kind of at a glance, procurement are going to be responsible for the largest portion of their emissions. That much responsibility sits with them. And then they lay out underneath this kind of the details of what each of those different teams are going to be doing. So the next piece is the engagement strategy. This is probably the most neglected part of transition planning. A lot of companies focus on what they're doing and how they are managing it, which is obviously understandable. But especially once you start mapping out those dependencies and external factors you can't control, it's really important then to talk about how you're going to engage with those external parties in order to make this a reality. That might be within your direct value chain, so with your suppliers or with your customers. It could be more broadly within your industry. And I think this is especially important in some of those hard to abate industries where you maybe have kind of fundamental technological problems that you're trying to solve. Aviation comes to mind, but there are obviously others. And then broader engagement with the government, with the public sector, with your customers or consumers or kind of broader society as well. All of these things are really important in terms of setting up what you need to be true and communicating what you're doing about managing those externalities. Generally, this is quite a boring section to read. We struggled to find a nice, pretty screenshot to show you for this one. This is from Aviva's report, so I'd highly recommend, if you haven't read it, have a go and look at this report. They're often held up as one of the kind of shining lights of transition planning. They were one of the first adopters of that TPT framework over in the UK. What they've done quite well is map out all of the different engagements that they have as part of this pillar. You can see there's a lot there. But what they also do underneath this is lay out how different parts of these engagements tie into different parts of the transition plan and to some of those dependencies as well. So mapping all of that and being really clear kind of where they're engaging and what they want to get out of those engagements as well. Fourth piece, metrics and targets. So I said this is the piece that most people have been partially disclosing within their initial disclosures already, especially around those greenhouse gas emissions targets, how you're tracking those, if you have a net zero strategy or a net zero target, what that looks like. I think the piece that often gets missed within here, which I actually think is in some ways more important than those decarbonisation targets, is the broader business targets and metrics that you want to be tracking. So thinking about kind of governance, engagement or operational targets that you can set that are needed to enable that transition, the financial piece around how you're funding this, or kind of return on investment that you expect or want to track on different parts of this transition. So there's quite a few different things that can sit within here. You've probably seen lots of examples of what those GHG targets can look like. So I wanted to show you something a little bit different here. This is from South 32's report. And one of the things that they set out in their initial climate change action plan was around decarbonising and shifting away from coal as one of their primary kind of revenue streams. So you can see back in FY16, big chunk, kind of over a third, I think, of their portfolio was in energy and metallurgical coal. And then up to kind of last year, they've gradually been phasing that out through a combination of growing that transition materials piece and also divestments and winding down of some of those coal operations. The reason why I like this as an approach and as kind of a metric that you're tracking is it goes far beyond the decarbonisation piece. This is a much more fundamental change to their portfolio and to the way that their business is operating. And ultimately, that is what this transition plan should be. It should be a long-term business strategy for how you're going to survive in that future world. So especially for companies in some of those rapidly transitioning industries, or where you're seeing some of those more fundamental changes. You know, if you're in transport and logistics and you're seeing that shift towards low carbon or electric fleets, if you're in the automotive sector, if you're in aviation and you're looking at a transition to sustainable aviation fuels or whatever that might be, how you're tracking, monitoring, and the targets you're setting around those business fundamentals is really, really important. Final pillar is governance. I'm not going to spend too long on this one. I think this is the piece people probably have most tightly wrapped up already. If you've been through your first ASRS disclosures, this was part of the assured piece that you would have disclosed already. And I think the big point here is that this is not meant to be reinventing the wheel with the transition plan. The same governance, the same structures, the same oversight that you have on those climate-related risks and opportunities and your broader sustainability reporting should all apply here. This is Zespri again, kind of breaking down how that engagement is happening and the governance within their organisation. So as I said, this type of diagram should be fairly familiar to most people. One thing I would point out that it is important to think about as you work through this governance section is how different parts of this plan are going to be managed differently. I mentioned earlier, this should be a fairly cross-cutting plan. It's not going to sit solely within a sustainability team or solely within a finance team. This is going to need input and engagement and ownership from across the business. So thinking about how that broader ownership and governance is set up is going to be really important to make this actually work in reality. So couple of key takeaways, and then I'll give a bit of an overview of how you can get started on this. So first thing that I do think is important is the standard does not actually require you to create a transition plan, but you are going to be required to disclose a lot of the elements that make up that transition plan. And the TPT framework can give you a really nice structure under which you can then disclose. And there's a couple of things that using that framework does. One, it gives you a really robust structure for the assurance process. So the auditors will be used to seeing disclosures within this framework, and you'll be able to easily point to the sections or the requirements that you're leaning on. The other thing it does is align your disclosures with both international best practice, but also stakeholder expectations as well. So stakeholders coming in who want to see these disclosures, want to see these plans, will be used to seeing them within this type of framework. So it makes their life a lot easier when they're trying to extract that information, and it makes these reports much more useful than just a compliance document. In terms of where to start, there's a few things that I mentioned that companies will already have or should already be working towards. So within that decarbonisation piece, you will have already been disclosing your scope 1 and 2. So you can really start there with your direct operational emissions and how you're going to decarbonise those, and then expand that as you kind of bring those scope 3 value chain disclosures in, and that can be added in later. And within here as well, you can also think about the types of targets you want to set, how ambitious you want to be, whether you want to align with other frameworks like the Science-Based Target Initiative. There's lots of different ways you can do this, and I think it comes back to that principle around why are you doing this and what is the benefit and how far do you want to go. Within that response to those climate-related risks and opportunities, I said, from the work that you will have been doing around resilience assessment and climate scenario analysis, you should have started this thought process. So you can use that as a basis. You don't need to, again, completely reinvent the wheel in terms of how you're going to disclose within a transition plan. And what you can also do is start with those low risk options. So those no regret options that you know are going to improve your resilience, are maybe low capex, and that you can start to work on now. And then think about those kind of bigger, more fundamental shifts kind of further down the line. Similarly with that economy-wide transition piece, thinking about where you're already having those engagements or who are going to be those really critical partners on this journey as a starting point before you start trying to buoy the ocean with all of the potential things and potential engagements that you could build into this. I guess the main takeaway here is start small. There's obviously a lot that can go into this, but you can begin this journey starting with what you have and building on that, and then working towards a kind of more robust, more complete plan in future years. I've used almost all of the time, but I think we do have a couple of minutes for questions. So if you do have any more questions, please do start dropping in the chat. I can see a few things that have been dropped in already. One question that we have is around whether this transition plan should sit within the ASRS disclosure or as a separate standalone report or within your sustainability report. There's a couple of parts to that question. The first answer is that yes, this has to be within your ASRS disclosure. So if you have a transition plan, you are required to disclose that, and you're required to disclose details of that transition plan within that compliance disclosure. What details means is slightly up for debate. So there's a few ways you could navigate that. You could put everything within that ASRS disclosure and that be your only standalone document. You could do a shortened version of it within that disclosure and then keep a separate climate transition plan or broader sustainability report that gets glossied up and published on your website. Or the third option, which I think is probably my preference and my recommendation, you could publish within that ASRS disclosure a section that is on transition planning that can be lifted and then also published separately. So it's the same content and the same information, but there is a separate publication of that transition plan for those stakeholders that only want to see that and go into that detail. So I'm just having a look at some other questions. So we've got a question here around the difference between transition plans and decarbonisation roadmaps. And I think I may have covered this as I went, but I think a really important part is that the decarbonisation piece is part of it. The transition plan is a more fundamental piece around how you're going to evolve your business and your strategy, your products and services, and other parts of the organisation beyond just that decarbonisation piece. There's a couple of other questions in there. We have run out of time and I don't want to keep anyone any longer. So I will follow up separately for those that I didn't get to. But I just want to close and say thank you all for joining. Hopefully that was useful. We will circulate the recording and the slides in the coming days. And if you have any further questions, please do reach out directly. Thanks, everyone.